Thanks, David, for introducing me. As you know, it's Kim Marler from KMA Accountancy, and we're running this webinar today to help you with getting paid in these difficult times. So just like to say a big welcome to everybody for joining us on this webinar, and thanks for making the time to listen. We appreciate your time is precious, and these are very, very difficult and uncertain times. And we want you to know that we're here to support you, albeit remotely, to give you whatever support we can and you need to get through these difficult times. Our core purpose is helping, supporting and partnering with you to help change the lives of our clients and their families by building better businesses and lifestyles. And by doing this, we want to enable you to have the lifestyle and business that you want, whether that's making more money, having more time with your loved ones, or less stress. So with this in mind, one of the main ways we can do that right now is to help you focus on your cash flow, helping you to improve it and to give you peace of mind to help you get through the next few months. Before we kick off, I want to give you a thought from the thought of the day. And as the quote states here, when a recession does materialise, many experts agree ready cash is the oxygen that every small business owner requires to survive. While of course cash flow can be very difficult at these times, today I want to share with you some practical things you can do to preserve and improve your cash flow. So this is the agenda we're going to go through. Required mindset in these difficult times, your debtor systems while working from home, lessons that we can take into the future, support that is available in the meantime, your next steps and any questions if we've got time. So as David said earlier, please do put your questions in the chat box and we'll answer them at the end. Okay, so what are your required mindsets, in these difficult times? Well, effectively, there's three really, and we'll go through those. So with our thought for the day in mind, you should never take your eye off cash flow. And before we talk about the strategies that you can adopt, let's talk about the three mindsets that you need to have. The first one is you've got to be positive. This is unprecedented times. It's very, very difficult, the whole pandemic, but we've got to remain positive. There is one certainty, and that's that we will come out of this. So we just need to, to remain positive. You also need to be empathetic. You must approach your debtor management with backbone and heart as well. And we'll look at these in more detail in a moment. And, don't forget, it is okay to sell in these times, so long as you're solving problems for your customers that they have right now. It is okay. And remember the analogy of the oxygen mask in a time of emergency. You need to put your own oxygen mask on first. If your business falls over, no one wins. You, your family, your customers, your employees, etc. So it's really important to do that. So let's look at this diagram. It's really important that we adopt that positive mindset right now, as we've said. So, what do I want to do during COVID-19? So this image really helps us to identify the different stages that we'll be at, and have been at during the COVID-19 pandemic. Sorry. Okay, so we're in the, we've been in the fear zone over to the left. And this was when the crisis started. Fear and panic at the unknown. What would we have to do? How would we manage? People panicking, stockpiling, you know, people just really not, you know, headless chicken in headlights, just not sure what to do. We're starting now to kind of move across into this learning zone. So as information becomes available, the panic starts to subside and we start evaluating what our options are. What can we control? What can we stop doing? What can we start doing? So we're in this state now and we need to look at moving into the far right-hand side, the growth zone. So when we say growth, we mean gaining confidence, having a clear purpose about what we need to do to move forward and putting a plan in place. So this growth zone, one of the things we can do is to look at the ways to improve our position, plan for, you know, now, for the short and long term. And by focusing on this and improving our cash flow now, we can operate as everything starts to open up and we get back to some kind of normality. So the next mindset we need to have is we need to be empathetic. You know, and of course it's not as simple as saying, right, oxygen mask on me, just look after me, and the customers must pay or we won't help. You know, we have heard some horror stories about businesses who are stopping credit and ramping up their debt collection without any thought for their customers and how they're coping. But of course we know this isn't you. So before we work out the best way to keep the cash flow going, we need a framework, a structured approach. And the approach starts with empathy, which, you know, we define as the ability to see things from your customer's perspective and be prepared to do something about it. If your clients are late paying, you know, get in touch. They may be in panic mode. They may not be coping very well. Show that you care, you know, and ask them how business is. You could also give your customers options about how they can pay you, whether that's longer to pay or a reduced amount now and catch up later. If they're a good customer, you know, show them empathy. It will provide long-term benefits for you in the future in terms of that loyalty payback. The next mindset we need to have is have backbone and heart. So as long as we're showing empathy and giving our clients choices, you can talk about how we're going to get paid. But you have to act with backbone and heart. You know, backbone, you are running a business and you too need the cash flow. So it is okay to be paid for the value you're providing. After all, you're running a business, you know, and which is equally challenged in these times. But you also need to have a heart, you know, and that heart is being empathetic. It's that flexible approach and being considerate in that approach. You need to demonstrate your purpose statement, you know, be customer focused and caring at this time. So as we've said, you know, you can look to consider different options for payments if customers and clients are struggling, but have a heart, but equally show that backbone too. The final mindset in these times, especially if you're a service provider, is that it is okay to sell. So long as your product or service is solving a problem for your customers and so long as you're going to be paid for the work that you do. As we've said, you know, previously in our business continuity planning webinar, you know, there are a lot of businesses that clearly don't have cash right now. You know, they've been in lockdown, they've had to close, and you know, there are businesses that are in distress and business owners that don't have money. But equally, there were a lot of, you know, reasonably well off or very wealthy people before this pandemic, and they will still have money. You know, their businesses might have either closed or trailed off a little bit. You know, they may have furloughed their workers. So those people are sat at home, you know, potentially with nothing to do on social media, you know, and if they've still got a reasonable amount of money behind them, they'll be looking to buy things that are of interest to them. So it is okay to sell as long as you are solving a problem. You know, I've heard, for example, that you can't buy jigsaws, you know, so, you know, jigsaw online shops, for example, have sold out because people are, you know, sat at home with nothing to do and want to do what they enjoy, which is jigsaws. So, you know, those types of businesses are still selling, as are food, etc. So, you know, just remember that it is okay to sell as long as you're, you know, serving a purpose and solving a problem. So let's look a little bit more at this spin cycle. You know, it's a line of questions that start with the top left-hand side, with those situation questions, and then move into the problem area, then into impact and needs. So let's use an example here. Let's say it's a company in the leisure, you know, retail. So that could be a restaurant, it could be a pub, it could be hairdressers, nail salon, you know, shop on the high street, whatever. So some of the questions that you might ask about around the situation are, how are you coping being at home right now? You know, are you spending a lot of time on calls to the staff? And the problem questions could be, you know, is your shop retail unit empty right now? Do you think everything's okay in there? You know, is there any stock that might go off? The impact questions as a result of that could be, you know, how are you feeling about that? Are you worried that because the shop's open, you might get a break-in? You know, do you know how you're going to be feeling about everything in a month from now? And then the needs questions, the next steps could be, you know, I know we can't be certain when this will be over, but you know, let's cover off those needs of our clients. You know, they may be hitting the phones and phoning customers to tell them that, you know, we're here, we're open, you know, we'll be opening whenever. You know, that could be June, it could be May, whatever you believe that needs to be. You know, you could be ringing your clients and customers now and saying, you know, we're still here, we're doing what we can. Obviously, if it's a hairdresser, that's quite difficult right now. But you could be booking appointments for when you believe the lockdown period will be over. Now, I appreciate that's quite difficult right now, but as we, you know, the coming weeks, it will become a lot clearer. And there will be a time when we know when the doors are going to open again. And so at that point, you could really be hitting the phone saying, right, okay, let's book you in. You know, we're going to be opening in 3 weeks. I'm sure you need to get your hair done. You know, and people will want to do that because they will have been struggling while they've been in lockdown, you know, wanting to get their hair done, their nails done, having to do it themselves, you know, not being particularly proficient at it, just making do, and can't wait for that freedom when they can just get out and treat themselves. So, you know, okay, I'm just kind of being a bit flippant here with some of these questions, but, you know, the important point to make here is it is okay to sell, so long as you're offering a way of solving problems for your customers. So let's move on now. We've talked about the 3 mindsets that you need to have, and we can talk more specifically about your debtor systems in these challenging times. So firstly, I'm going to talk about best practice, then we'll share with you some guides and scripts, and then I'm going to talk more about the credit control processes. Now, I've got some guides, I've got a guide and some scripts to help you, you know, collecting your debts, best practice, etc. And we will make sure that everybody gets those at the end of this webinar. We'll ping those out in an email with a recording of the webinar, You know, if for whatever reason you know that doesn't arrive, then please do, you know, get in touch. Okay, let's look at best practice. So really, essentially, nothing should change here. You know, you just need to show more empathy. So if you had a great system beforehand, you know, continue to use that. Equally, if you know that, you know, maybe it needed a bit of tweaking, then probably now is a good time to focus on it. And obviously, the guide that we're going to send you and those scripts may help with that. So by engaging more with your customers around their particular circumstances, you can tweak your processes just for the customers who are going to struggle. Remember that not all your customers are at great risk here. COVID-19 should not give them an excuse not to pay you. You've done the work, you know, you've supplied the product or the service, and you're running a business and you need to be paid. You're not a charity. If your clients, you know, like our, are likely to be using Xero, so they can still send out statements and invoices. So there's no change in the processes or learning, you know, something to get by in this new world. So if you haven't got, you know, Xero or some other cloud-based accounting system, then now is probably a really good time to investigate that. So let's look at, you know, best practice credit control. You know, you've probably got some great guidance notes for your team members already that are responsible for credit control, or obviously if you're doing it yourself, and debt collecting. Things like flowcharts, scripts, templates. We'll show you these shortly as we've put together a package on this, as I've said earlier. It's really important now with your team members working from home that they do have that great process to follow. You know, a lot of problems with debtors come about because we haven't got a great system in place around giving, you know, credit in the first place. But we'll talk about credit checks and outsourcing shortly. But we do recommend that you carry out credit checks, and ideally regularly, especially when there's a big increase in the amount that they are buying from you. And you could also consider credit insurance. Now, I appreciate that, you know, it's often very difficult to continually do credit checks. But as we say, you know, definitely do them when there's a big increase, and consider, you know, credit insurance just in case. So these are the guides and, you know, the guide and the scripts that we talked about. And just a quick sort of overview here. You know, there's about half a dozen different scripts that you can use yourself or get your, you know, team to use when they're on the phone. It's often an area that most people are not particularly comfortable with. So a script often helps, you know, gives you a framework to work to, that obviously you can go off-piste, but, you know, it often just helps. And obviously the credit management guide will go through a number of different areas to help. So I won't bring it up on screen and take us away from this, but that credit management guide will, obviously you can see the overview here, but then it goes on to talk about, you know, your terms of trade, what you should do there, your billing and payments, payment terms, automation of billing and payments, debtor management, you know, initial contact, privacy considerations, follow-up, and then referral to external debt collection agencies if you need that. Okay, so credit control services. It's important to remember, excuse me, it's not just about following up your debtors. As we've said, it's a complete system from when you take a customer on till they pay you. Remember, it is not a sale until the money is in your bank. Lots and lots of people forget about this. You know, turnover is vanity, profit is, you know, sanity, and cash flow is king. So, as we mentioned previously, you could outsource your credit management. You know, we believe this is best practice, because, as I've said before, you know, you're very often not, you know, comfortable with credit control. I mean, I'm personally a great believer in outsourcing what ultimately is beneath your pay grade. You know, for example, business owners feel that they've got to do everything themselves, and very often they'll end up doing, you know, answering the phones, doing their admin, doing their bookkeeping, you know, credit control, all of this good stuff. Now, if you're struggling for time, and very often things like credit control, bookkeeping get pushed to the, you know, end because it's not something you enjoy doing, so you'll always do the stuff that you know, want to do first, then actually it's a good time to step back and think about the different aspects of your business. You know, what do you need to do? What should you be doing? Well, clearly right now, you should be planning, you know, thinking about your business model, your strategy, and focusing on the future so that you're in a really good position when we come out of this to take the market by storm. So maybe it's a good time to consider, you know, outsourcing and what you're going to do. And ultimately, you know, if you can earn, you know, 100, 150, 200 pounds an hour by selling your product and your service, then why would you, you know, continue to do stuff that is going to take you away from that? So can definitely consider, you know, outsourcing. It frees up your time to do what you're good at and you must do in the business. It is essential, though, that you build relationships with your chosen providers so that they can understand your core values, your style of communication, the language you use, and it's not something to do in super quick time. You know, and as it says here, it's not an ambulance at the bottom of the cliff. In this current climate, you can't suddenly outsource credit management for customers who are going to really struggle in these difficult times. And, you know, and all that will happen if you do is that you'll cause untold brand damage, you know, not to mention waste a lot of time for everybody. So it's definitely, you know, something to consider, but not to do in a rush, a knee-jerk reaction. That's why we've developed the content now, you know, and we're going to share with you. And also, our cash flow management coaching service is a great way to drill down even further to make sure that you've got the best systems in place to free up your cash flow. You need to consider those credit checks, as we've already said. And here in the UK, there are a number of providers that you could use, you know, for new customers that, you know, you don't want to inherit non-paying customers from other companies, even in the current climate. So credit checking should be a standard part of your onboarding process. And you can use, you know, companies like CreditSafe, Endoli, Equifax, but also there are some online, what we call fintech providers now that have popped up, like Satago, who, you know, you can do it much more kind of cost effectively and quicker as well, potentially. So, lessons that we can take into the future. You know, we've talked about best practice with your debtors and how to avoid working for people who can't pay or won't pay you. Now it's time to talk about what you need to be doing going forward from here to maximise your own cash flow. We do need to plan, you know, and we'll do that in the future, so the business is much more resilient and your cash flow is improved. Some of these concepts you may have heard before if you came to our business continuity planning webinar. And then listen, you know, if this is you, then listen for the distinction and make some notes about the actions you need to take, as we'll be asking you at the end to email in some feedback to us. So, you know, lessons that we can take into the future is looking at your cash conversion cycle, the business 101, the 7 causes of poor cash flow, getting quick wins or runs on the board, as it says here. You know, we'll look at bank assistance and government support and tax consideration. And we've already, you know, if you, as we said, if you were on the business continuity webinar, some of these you'll be familiar with. So let's look at the cash conversion cycle, as this is one of the most important ways to improve your business by shortening it. In other words, get your cash in quicker. What's super important in times of crisis is that all businesses speed up their cash conversion cycle so that the economy keeps working. Paying your suppliers more slowly just creates problems for other businesses who most likely are suffering as much as you are. So let's take a look at a real example. Let's just say a wholesaler. I mean, it could be equally any business. You know, and if it was a service business, for example, then rather than stock holding, we'd be looking at work in progress. So in this example, the wholesaler buys stocks from his suppliers, and on average, he's got to pay those suppliers 45 days after buying the stock. But the stock doesn't sell the moment it comes into the warehouse. Some stock sells quickly, other stock takes longer though, and eventually will sell. And some stock has to be discounted to get it to move at all. On average, as we can see in this example, the stock is held for 60 days. When the stock is sold, credit terms are provided to customers, but a number of customers are not observing these credit terms, and on average, it's taking 60 days for customers to pay. So now we calculate the cash conversion cycle. So 60 days average stock holding plus 60 days to get paid by the customers, less 45 days credit provided by suppliers. So that's 75 days to convert those inputs to cash. In difficult times such as this, we need to ensure that you have a plan in place to shorten this cash conversion cycle. This is a process we would recommend you do as part of that business continuity plan. Using the numbers from your most recent management accounts, we can work the above numbers and calculate your cash conversion cycle. From there, we can discuss with you and we can work together to shorten this cash cycle and free up more cash. For example, if your debtors are £50,000 and your turnover is £500,000 per annum, a 10-day reduction in your cash conversion cycle is worth £13,700 to you. This is cash that you could really do with right now, I'm sure, or cash that could be working harder for you in your business right now. We recommend you incorporate a review of your cash conversion cycle as part of your business continuity plan or forecast, so as to free up as much cash flow as possible. And we'll talk more about this shortly. If you went through this in the business continuity webinar, then hopefully you'll remember this. So another area to focus on your cash flow needs is your business 101 cycle in these difficult times. As we often tell you, there is a massive difference between profit and cash. Profit is what you pay your tax on, but cash is the oxygen that your business needs to survive. So what is really important here is that as well as improving your cash conversion cycle, you make plans to maximize your profit and at the same time finance your business correctly. So let's go through this this business 101 cycle. let's start at the top. So as an owner, so we'll start at the top top left-hand side as an owner. So, you know, as the business owner, you will introduce cash into the business. And with that cash, you will buy assets moving around. You may also borrow cash to purchase assets. So those assets are used to generate a profit. And you can not only measure that by increased profits, by increasing your sales as one means to increase the profit. Now, I appreciate maybe it may be very difficult in these challenging times to increase sales, but it is still possible. You know, another way would be to look at, you know, increasing your margin or your efficiency in the business, reducing overheads. So there's lots of different ways that we can look at increasing the profit, not just growing the sales. So now is a very good time to be looking closely at this and looking at potential new revenue lines. We've seen lots of businesses looking, you know, or needing to pivot their business. I mean, for example, you know, you may have a business that's had to close, like hairdressers, you know, a gym, a retail unit, you know, physiotherapist. There may be a number of businesses that can't operate in the traditional way. And what we've seen, you know, and obviously we've spoken to our clients in a lot of cases about this, is how they can pivot their business. So for example, you know, if you are a gym, you may have provided online classes. Now, it may not be exactly the same, but you know, you can do that. For example, our own daughter, you know, her music lesson has had to be provided digitally over the internet using Zoom. Not quite as good, but obviously it's the best that we can do in the current situation. So it is important that you do that. Equally, we've seen, you know, physiotherapists, for example, who would normally work face-to-face with their clients, but due to the social distancing, can't. So I've had to provide other means. So, you know, phone calls, video calls, taking clients through exercises that they can do to help in the current situation. Now, as we say, it's not quite the same as being face-to-face, but, you know, needs must, both from the business perspective and from the client perspective in these difficult times. So now is a very good time to be looking closely at potential new revenue lines, as we've said, and pivoting the business, you know, new potential customers, pivot in the sales strategy, or what you can do to avoid losing your existing customers. You know, it may just be as simple as keeping in touch in the current climate. At the same time, you should be looking at how you can improve your margins via efficiency gains, better purchasing, reduction in errors and wastage, or simply discontinuing the products or services that have a poor margin. Once you've derived your profit, you need to turn that into cash. You know, profitable businesses can and do go broke at times like this. And now is not the time to be slow or lenient on debt collection. We need the money to keep spinning around in the economy. Likewise, you need to be very careful about reordering stock. Can you operate with less stock, or are there items that are likely to be in short supply that you need to get in? And other areas to help improve your cash flow could be things like better terms with your bank and other lenders. You know, can you go onto an interest-only loan scheme, for example? You know, or can you extend the length of that loan? I'll cover more on finance shortly. There are also other options like deferring tax payments to help with your cash flow. And again, I'll cover those in more detail shortly. So let's go through the 7 causes of poor cash flow. Part of our cash flow management coaching service involves a full review of each of these 7 causes of poor cash flow, so that together we can put a plan to free up as much cash as possible. So, as we've said, it's your accounts receivable process, looking at that, not having it, being too lenient, not chasing those debts quickly enough. Equally, another cause of poor cash flow can be where you pay your suppliers too quickly. An area where you can tie up cash, in a phenomenal way is stock or work in progress. You can have too much stock and it takes you too long to sell that stock, or it becomes obsolete and you have to write it off and effectively throw it away or sell it at a very reduced price. And obviously we've discussed that one earlier. Equally, if you're a service business, you can have too much work in progress and not actually get things over the line and get them invoiced and out. So again, it's really important that those sorts of things are looked at. You can also have an inappropriate debt or capital structure in your business. Your overheads can be too high, your gross profit margin could be too low, or fundamentally, your sales may be too low. And we've got extensive resources that we can share with you as we go through this process, that we can implement these ideas with real power to make a big difference to your business. And as we say, part of the cash flow management coaching is a big way to address those. So, how do we pull all together, benefit now and in the future? What can we do to get some quick wins on, the results sheet, if you like? So we've talked about credit control procedures, getting those tightened up, not being lenient, slow, over lenient, as it were. Getting those clear policies in place, those notes, flowchart scripts, training your staff so that they can be on it even when you can't, and obviously we can help with that. Or you could consider outsourcing credit control. And like we've said, you need to be careful here though, if you do it suddenly, because, your customers are highly unlikely, some of them are, if they're unlikely to be able to pay you, then you risk irreparable damage. If you don't currently use an outsourced credit controller, then this is something that you could implement as part of your long-term plan if it's of interest to you. But in either case, you're most likely going to need to deal directly with the customers that can't pay you. Remember the points that I made earlier about being empathetic with those customers and how you can use the guides and the scripts to help you to do that. You can revise your terms of trade and your proposals and make sure that you don't perpetuate poor practices in the future. And once again, we've got plenty of ideas that we can share with you on a one-to-one basis as part of our cash flow management coaching service on that. The strategies that you can adopt here, that need to be tailored to your particular business. A good time to review your invoicing process, get those customers onto repeating or automated invoicing where you can, so that you're never slow in getting out your invoices. But obviously you do need to be careful how this is set up. But obviously it is a lot easier when you have got cloud accounting software. Consider if it's possible to create contracts with your clients with more regular invoicing. You could look at deposits on an acceptance of a proposal, or interim invoicing, or progress payments if it's appropriate. If you have any additional or out of scope work, make sure you communicate that early and get an acceptance from your customer in advance of doing the work, so as to avoid a complaint or invoice query or dispute after the work's being completed. And don't forget to update your price list. When was the last time you did this? There is a temptation to think in times like these that you can't increase prices. Remember, it's all about value for money, and you deserve to get paid for what value you are delivering. You know, as we've already said, you can send using cloud accounting software like Xero. You can send invoices out a lot quicker, and actually you can email those invoices and statements. And you can also use add-on software like Satago, Chaser and other apps to automate credit control. You can also review your management controls and procedures about spending and invoicing. For example, set limits around what stocks or products can be ordered. Look at ways to reduce your level of stock or improve your efficiency in operations. Whatever you do, don't keep working for customers who don't pay. You are running a business, not a charity. And right now, you need to reduce your risk wherever you can. We'll cover banking facilities and fee funding separately next. So, if cash flow is tight, then we do need to look at ways of improving this, which, can be through a number of things. Like, for example, as it says here, you can increase temporarily overdraft facilities. And we believe that, a lot of banks are very amenable to this right now, especially whilst it's very difficult to get the CBIL loans out into the public domain. You can also, if you've got assets that you own, you could look at asset refinancing. There is the opportunity to take loan repayment holidays, on residential property and possibly on commercial, or deferment of repayments, or moving stuff onto an interest-only basis in the short term. You could possibly extend the lending periods, in terms of the end dates, extend it from by another year or so. There are obviously short-term loans that possibly are available. As we've already said, repayment holidays, short-term mortgage holidays. There are business and personal credit card options, and obviously the CBIL loan scheme. So the short-term, there are other providers as well. We've talked about this, fintech sector of our economy that has shot up. So there are short-term loans, credit cards, etc. Now, I'm not for 1 minute recommending these to you. I'm just saying that they are available should you, wish. But obviously, do take advice on any, finance products. So there are lenders like Capital on Tap, wecare, Funding Circle. I've heard that Funding Circle are now part of CBILS. Obviously, these lenders, because they are able to act quite quickly, they're not a traditional bank as such, they do, usually charge higher interest rates. So especially for, CBILS, etc. We're hearing that with the traditional banks, that the rates are, 3 to sort of 5-6% above base, whereas the fintech providers are, somewhere like 8 to 10%, or even higher. So we did cover a lot of this off in our COVID-19 Business Survival Guide 28-point checklist, And as I've said, these potentially could be expensive, but they are, faster and can clearly give you peace of mind if you need it, if you are struggling on that cash flow point of view. As we discussed in our business continuity webinar, this is all part of your cash flow improvement and should definitely, factor in a discussion with your bank or other lenders about how they can help you in the short term. Then, of course, there is the help that's potentially available from the government in terms of, support, grants, and tax considerations. Obviously, these are subject to change, but there are a number of ways here that can help improve that short-term cash flow. One thing you do need to remember, though, is, the taxes still need to be paid. They're just a deferment. Grants don't need to be repaid, but they are taxable. So let's look at the different support that's available. As we talked to, if you did come on the business continuity webinar, you will have seen this slide. So VAT payments are automatically being deferred for the current quarter. You don't have to pay your VAT bill for anything that was due to be paid, over those first 3 months, March, April, May. That's being deferred until the end of the financial year, next, by the 31st of March 2021, we believe. Equally, there is the deferment of the second payment on account, which is due, was due in July. That now will not become due until January. You don't need to apply for these, you just need to effectively take advantage. So, for example, if you pay either of them via direct debit, then you need to cancel your direct debit, especially for the VAT payment, because we have been told that if you don't cancel that, then it will automatically be taken. What you do need to remember, though, with the VAT deferment is you still need to submit your VAT return. There obviously is the increase in working tax credits, and there's been a big uptake on that, where people have fallen effectively, through the cracks. Obviously, there's the changes to statutory sick pay that we've seen, where if you believe that you've got coronavirus, you can claim statutory sick pay from day one for up to 2 weeks. So if you're having to self-isolate at home and you can't work, then obviously that you are eligible for that, and small businesses can reclaim that from the government. There's also the coronavirus job retention scheme for furloughed workers. This allows UK employers to access financial support to continue to pay, up to 80% of the worker's salary, up to £2,500 per month. This is intended to enable you not to make your staff, your workers, redundant. Clearly we went through that, so I won't go into massive detail, but shout if you need any more help on that. Self-employed, obviously there's the income support scheme for the self-employed. This is a taxable grant worth up to 80% of your average monthly profits if your profits are under 50,000, and if your self-employment is more than 50% of your income, and that's based on up to the last 3 years' profit. It's a maximum of 2,500 per month, and it will be paid in a lump sum in June. We've been told that you don't need to apply, and that HMRC will know whether you are eligible because of your tax return that you submitted for the 18-19 tax year. But again, you know, they may send you out a form to complete. With the job retention scheme, again, how that works is you continue to pay your staff. You obviously need to make sure you follow all of the furlough you know, rules, as it were. And then the portal is due to open from Monday the 20th of April, where you'll be able to effectively put the information in and get those payments. Now, we don't know, firstly, you know, when it's going to be open, if it is definitely going to be open on Monday, you know. Equally, we don't know what, you know, what format yet exactly until we see the portal, what it's going to look like, how much work, you know, whether it's per individual employee or per business, you know, and obviously you'll have to have the records for that. And we don't know how long it's going to take to reimburse with those furlough payments to employers. As we've already talked about, there is that coronavirus business interruption loan scheme, you know, loans to businesses which are interest-free for up to 12 months. I was listening to the Small Business Minister, Paul Scully, who was saying that now, you know, if you had put an application in before and effectively been turned down and given other products, you can now go back and say, no, you want to be considered for the coronavirus business interruption loan scheme. But of course, you do need to make sure that you meet the criteria, that you can demonstrate, you know, how your business has been affected by the coronavirus. You've got a synopsis in there, you've got a cash flow, you know, and you put it all together. It's really important that you put it together properly the first time, because otherwise, if there is, you know, incomplete information or incorrect, you'll be pushed to the back of the queue, and it's already taking a long time to process. That is something that obviously we can help with, and we can quote on that on a business by business basis. If you're in receipt of the small business rates relief, or if you're in the retail sector, you may be eligible for one of the grants. And obviously, again, you know, dependent on the you know, rules, there is a business rates holiday as well for certain businesses. So that's the help that's available from HMRC. So we've set out for you the mindsets that you need to have in these difficult times, that you need to be positive, empathetic, and have backbone and heart around debt collecting and how to avoid shying away from selling. We've shared best practice about credit control and debtor collection and showed you a guide and scripts that you can use. We've covered how to free up as much cash flow as possible by looking closely at your cash flow conversion cycle and the Business 101 model. We've looked at the 7 causes of poor cash flow and how you can get some quick wins to improve cash flow. We've looked at banks and loan support available, and we've covered what support's available from the government. Now, it's really important that you decide what you're going to do. As we've said before, clearly doing nothing is not an option. Now is the time to put that oxygen mask on yourself, make a plan to get through this. You know, part of that planning is to surround yourself with experts as your accountants. You know, we are here to help. And remember to focus on what you can do, not what you can't do, what is in your control. With this in mind, we've developed those, you know, guides to credit control and some scripts that we've already talked about for debtor management that we'll get out to you at no cost. And we also want to share with you now how we can help you even more. We're going to ask you to share in your feedback to us what actions you're going to take. So how can we help? Well, you know, our recommended strategy is that you complete that business continuity plan. And many of you, as we know, are well on your way with this work, because because we've been receiving some fantastic feedback about how helpful that process has been. So if you haven't done your business continuity plan, now's the time to do this, and it will form a great foundation on which to build your cash flow improvement strategy, and also potentially help with any CBIL or other loan application. So there's two options that we recommend to get that plan completed. So as the first one says here, meet with us online, clearly at the moment, so that we can do this together, either as a one session, perhaps up to 4 hours, or 2 shorter online sessions. The advantage of this approach is that we'll be able to make sure you get all the entitlements to support that are available to you. And we also believe that combining your expertise with our expertise will result in a far better plan for you. And that's why we've reduced our fee to 50% of our normal rates to support you to take this action. Now, the second option is that, we'll share with you, and have shared with a lot of our clients already, that free business continuity plan template and guide, so that you can complete the first draft of the plan on your own. And then we'll have an online meeting of about an hour to an hour and a half to finalise that plan. This option suits people who feel comfortable preparing the plan themselves and are not inundated with other things to do right now. The risk with this approach, though, is that with everything else going on right now, you may not get around to doing the plan. So again, to help that, we've discounted our fees to 50% of what the normal charges are to make it more affordable. Now, for those of you that have either already done your business continuity plan or want to do it, that's great. We'll send the free plan template to you, just shout. So if you've already done that, then obviously the next step would be to complete a cash flow forecast. Now, you may be preparing one of these anyway for your bank, especially if you're applying for a CBIL loan. Now, doing this together allows us to share with you many ideas to improve your cash flow in these challenging times. And a combination of finance, government, tax assistance, and what we know about the business, and cash flow improvement tactics are needed here. So your cash flow is the step that identifies where the improvements can be made. Having a cash flow management initial coaching session will help us to show you how to implement these ideas from the forecast. Consider it as an opportunity for us to show you the full extent of what's possible in your business. Now, we are very confident that once you see the value and the improvement in your cash flow, you'll want to continue working alongside us on an ongoing basis of cash flow management coaching. So at this stage, we're just asking you to commit to one session. So again, the prices are on the screen for you. So, okay, and then obviously the final steps are for you to, another option for you is to take the credit management guide and the accounts receivable call scripts and review and implement some changes to your processes. We appreciate that it may be very difficult for you right now to commit spending money, and that's why we've made a lot of these options reduced our fees down. Also, we are prepared to help wherever we can, and so if you need to spread the cost of some of these services, then again, we'll help if we can. So the easiest thing to do would be to give us a call or ping us an email. We know you'll get a lot of benefit and that from these services, and the benefit will far outweigh the fee. But more importantly, it's about helping you as quickly as possible. Questions. David's telling me that we've got, you know, an awful lot of questions. I don't think we're going to have time to answer those. So rather than, oops, sorry, I'm a bit trick happy there. So rather than do a disservice to you, what we'll do is we'll ping out answers to those questions individually. There was a couple that were, you know, came in quite early doors, so I'd like to just quickly, if I may, go through those. But, you know, apologies if we don't get round to answering your question, but we will make sure that we come back to you via email. So one of the questions that we had was, I've lost nearly 75% of my income and my business can't operate normally right now. What can I realistically do about my cash flow? So what's super important here is to establish as best we can together what your business will look like when it reopens. And this is why we recommend a business continuity plan. And then, you know, once you've done that, a forecast. You know, let's look at what cash you have got, what costs are in the business right now, you know, and what cash you're going to need as you open the doors up again, and any gaps that there might be. And with these two documents, we can make sure that also you're getting all the entitlements and put, you know, a finance application to the bank if need be. So there is you know, an awful lot that can be done, and you don't need to kind of panic right now. What we need to do is sit down and look at that. I've also been asked, again, you know, fairly sort of early doors, and it was a question that also came up as a result of the business continuity, that, you know, people appreciate the solutions that we're offering, both the free and the discounted or you know, other solutions, but simply can't afford to pay right now. You know, what do you suggest? So, you know, as we've said, first and foremost, our thoughts are with all of our clients who are, you know, suffering right now. You know, we all are. It is uncertain times, unprecedented times. Everybody's worried. Obviously, everybody wants to conserve as much cash as they can, and we completely, you know, understand that. We're in the same situation ourselves. We're all facing similar challenges with our businesses, and, you know, given the number of clients that are badly affected. And so that's why we've put available the various different options. You know, the options, the DIY options, where, you know, you take the free resources and go and give it a go yourself, because we want to give as much value as we can to our clients to help them through this time. Also, obviously, we've reduced our standard rates on some of the services, you know, and our commitment to you is that we are here to help. So please don't let the lack of ability to pay to be a barrier. Let's find a way to make this work. You know, whether that is, you know, helping you to get some funding and then paid out the funding, or whether it's a case of, you know, longer payment terms. Let's have a conversation about it. You know, at the end of the day, as I say, give us a call or drop us, you know, ping us an email, and we'll work something out between us. As I say, I'm conscious about timing, so I'd like to, you know, finish there on the questions, and ultimately we will ping out those answers to everybody else's questions from the chat box. Okay. I want to say a massive thank you to everybody who's taken the time to attend this webinar, and obviously for staying right the way through to the end. You know, we appreciate that your time is very valuable, you know, and more so right now. We hope we've given you plenty of ideas to think about and some clear options of what you can do and how we can support you. But before I go, I thought I'd share with you this quote. When you show deep empathy towards others, their defensive energy goes down and their positive energy replaces it. And that's why you get more creative that's when you get more creative in solving problems. Now that's a quote from Stephen Covey, who wrote a book called The 7 Habits of Highly Effective People. So let's make sure we approach our own cash flow challenges with empathy to get us through these difficult times. Show your customers that you care. So thank you for attending and participating. As I say, we'll make sure that you get a link to this recording, today's webinar, a link to the recording, and obviously the guides that we've talked about and the scripts. I would really value any feedback that you've got. If you could tell me, what 3 things of value, what you're going to do as a result of this webinar. And ultimately any feedback on the webinar itself, and any future topics that you'd like me to cover. That would be fabulous. And I'll remind you in the email that will come out to you over the next day or so. I'd really appreciate your feedback. That would be fabulous. So thank you very much, and speak to you soon.